Hello and welcome to another episode of VAT Update from Tax Essentials for Advisors. I am Ed Thompson. Now, this edition looks at a further HMRC policy announcements on the VAT liability of temporary medical staff. We've also got confirmation that the changes to the capital goods scheme are now in force. There's a case that we'll look at on missing trader fraud and HMRC's powers to deny VAT recovery in a supply chain. And the VAT tip today is around processes and controls, which is a particular area of HMRC scrutiny at the moment. Let's get into it. So first up, confirmation that the capital goods scheme change is now fully in force. For land and buildings, if you're only starting to incur capex now, the threshold has jumped from £250,000 plus VAT to £600,000 plus VAT. Now, that doesn't rewrite the past. Any asset where VAT was incurred before the 29th of July still sits under the old threshold and the old rules, and you follow those old rules for the full adjustment period. But going forwards, this is going to take a lot of projects out of the capital goods scheme. It's now much less likely, for example, that a refurbishment or a mid-scale development would tip over into the capital goods scheme. And HMRC have publicised these changes in a new HMRC brief, and they've also updated the public notice on the capital goods scheme as well. HMRC has also released another brief, this time expanding on their new policy for the VAT treatment of the supplies of locum doctors. So commonly this is the scenario where an employment business supplies a locum doctor to, for example, the NHS. You may remember the Isle of Wight decision last year, which essentially found that HMRC's policy in this area was wrong. The new brief now confirms that supplies of GMC registered locum doctors are exempt, but this doesn't extend, at least in HMRC's view, to other professionals who happen to be registered with the GMC. HMRC are inviting claims for overpaid VAT, but it's only the supplier that can make the claim. Whether it's paid will be assessed on a case-by-case basis. Now, factors to consider include: is it genuinely a supply of GMC registered doctors? Would the supplier be unjustly enriched? Will the VAT be passed back to the customer? And what would the impact be on partial exemption and VAT recovery for the supplier? There's a lot for everyone in the supply chain to work through. Now, it's quite a period for cases over the summer, but it's worth flagging a recent decision on HMRC's powers to deny VAT recovery, where a supply chain is connected with VAT fraud. Now, these cases appear regularly, especially in labour supply chains in construction, but we don't often cover them in these updates. But this one involved a 3.3 million VAT recovery denial under this so-called Kittel principle. Now, construction labour, as I say, is a common area for these disputes, and it underlines why due diligence in the supply chain has to be robust. Otherwise, a business can end up facing a significant denial of VAT recovery. Now, as it happens, the taxpayer here won. HMRC hadn't done enough to show that the VAT loss elsewhere in the supply chain was actually caused by fraud. Without proven fraud, the Kittel tests couldn't operate. Now, had fraud been established, it might have been a different story. The tribunal suggested that the taxpayer would likely have failed the knew or should have known limb of that Kittel test. But that point was academic. Let's move finally on to our tax tip for today. And across many sectors at the moment, HMRC visits are showing much more attention on the process and control environment in VAT. And businesses and other organisations need to be able to demonstrate that their VAT processes are sound if they want to reduce penalty risk. A good control environment can be benchmarked against HMRC's Guidelines for Compliance 8, which were published at the end of 2024. Now, these guidelines set out a lot of what HMRC expect to see from a good control environment. In particular, there should be clear responsibilities and sign-offs with defined ownership of each part of the VAT process, and there should be formally documented process notes, something that can be followed, understood, and that sets out the control points within the workflow. Those basics go a long way. Thanks for joining us, and I look forward to presenting another update in a couple of weeks' time.
Thanks, Ed. See you again in a couple of weeks. Just a quick reminder that we will be hosting another free CPD accredited webinar on the 26th of August. This time the topic is tax-free benefits and the opportunities and traps surrounding these. And our special guest is Jack Bonehill, Chartered Tax Advisor with PKF and host of the Tax Professionals podcast. Use the link below to register. Hope to see you on the day.